Welcome back to Global Value. In today's video, we're taking a look at CarMax, ticker symbol KMX. We'll be performing a fundamental stock analysis of CarMax, which will help us come to an understanding of the company based on its financials. At the time of recording this video, CarMax is trading for just over $92 a share. Over the past year, they're down about 27%. However, over the past 10 years, they've returned about a 12.6 compounded annualized return. If you had invested in CarMax 10 years ago, your money nearly would have tripled. So CarMax is trading just over their 52-week low, close to being cut in half from their 52-week high. CarMax is a $16 billion company. For some background about the business, CarMax sells, finances, and services used and new cars through a chain of over 220 used retail stores. It was formed in 1993 as a unit of Circuit City and spun off into an independent company in late 2002. Used vehicle sales account for almost 83% of revenue and wholesale for about 14%, with the remaining portion composed of extended service plans and repair. The company operates in two segments, CarMax Sales Operations and CarMax Auto Finance. It offers customers a range of makes and models on used vehicles, including domestic, imported, and luxury vehicles, and extended protection plans to customers at the time of sale, as well as it sells vehicles that are approximately 10 years old and have more than 100,000 miles through wholesale auctions. The company also provides reconditioning and vehicle repair services and financing alternatives for retail customers across a range of the credit spectrum through its CarMax Auto Finance, as well as arrangements with various financial institutions. In fiscal 2021, the vehicle retailed and wholesaled 750,000 and 426,000 used vehicles respectively. CarMax is the largest used vehicle retailer in the United States, but still estimates that it only has about 3.5% of the U.S. market share of vehicles 0 to 10 years old. It seeks over 5% market share by the end of calendar 2025. CarMax is based in Richmond, Virginia. To get into the right headspace, let's remind ourselves of the 4 principles of value investing. Principle number 1, when you purchase a share, you're not buying and selling pieces of paper or a number that goes up and down on a chart. You're buying fractional ownership of a business, and you should think of it as if you're buying the entire business. Principle number 2, insist on a margin of safety. All companies are worth the sum of all the cash they'll produce between now and Judgment Day, discounted back by some reasonable interest rate. If you can figure out what they're worth, then you should pay a price well below that. Principle number 3, Mr. Market. Your job is to make Mr. Market work for you and not the other way around. Mr. Market gives you quotes on businesses every couple of minutes, and when he's providing you with quotes that are way too low, you should be buying from him. When the quotes are way too high, you should consider selling. And principle number 4, circle of competence. We want to maintain intellectual humility and only invest in businesses that are within our circle of competence. This helps us to minimize mistakes and build conviction for the long run. So without further ado, let's dive right into the financials of CarMax and understand this business on a fundamental level. We'll be performing an 8-pillar analysis as popularized by Everything Money. Starting off with pillar number 1, we want CarMax's average 5-year PE to be below 22.5. Currently, they're trading at a PE just above 14, and their 5-year PE is 19. So this one is going to be a check to start. Next up, pillar number 2, we want their average 5-year return on capital to be above 9%. So CarMax has had pretty steady returns on capital over the last several years. However, their return averages out to about 6.2%, so below that 9% metric we're looking for. So this is going to be our first X. Pillar number 3, we want to see 5-year revenue growth, and we see that here. In fiscal 2017, CarMax had about $18 billion of revenue, and they increased that to about $33 billion in fiscal 2021. So that's a check on pillar number 3. Pillar number 4, we want to see 5-year net income growth. In fiscal 2017, they had about $660 million of net income, and that increased to $1.1 billion in 2021. So this is another check. Next, pillar number 5, we want to see decreasing shares outstanding. Provided that CarMax repurchase these shares at a reasonable valuation, we want the business to be increasing existing shareholders' ownership percentage of CarMax. And so that's the case here. They've reduced shares outstanding from 184 million in 2017 to 165 million in 2021. So that's a great sign. Next up, pillar number 6, we want to see 5-year free cash flow growth. CarMax has had negative free cash flows in 4 out of the past 5 years, and last year they had negative free cash flow of nearly $3 billion. A lot of this is going to come from changes to working capital, which for used auto sales means that they're having to spend more money on the cars that they have on the lot. This is not surprising given that the price of used vehicles has drastically increased since the pandemic. Averaged out, CarMax burns nearly $700 million a year. And we can see that a lot of that comes from them having to employ more working capital in their business. Pillar number 7, we want their net debt to be below their 5-year average free cash flow multiplied by 5. So CarMax has a lot of debt. They have $19 billion of debt. And because they have negative free cash flow, this pillar is going to be an X. And so they employ more debt in their business than what their market cap is. Finally, pillar number 8, we want their market cap to be below their 5-year average free cash flow multiplied by 20. So they have a $16 billion market cap, and again, they have negative free cash flows, so this pillar is also going to be an X. One thing to make note of is that both Chuck Akre and Sequoia Fund own about the same amount of CarMax. They each own about 4.5% of the business. These are two funds that have really phenomenal track records, so it may be worth looking deeper into CarMax. So in summary, CarMax checks the box on 4 out of 8 pillars. They're trading for a reasonable PE, however, they have lower than average returns on capital. They've had 5-year revenue growth and net income growth. They're also buying back shares. However, their free cash flow is what gets them into trouble, and they've had to employ a lot more working capital in their business over the last 5 years. The other factor you want to consider here is that CarMax employs a lot of debt in their business. So you want to understand how that's structured. So you want to understand what those unit economics look like for their car inventory sales, their wholesales, and their financing division. That's it for today's fundamental stock analysis of CarMax Inc., ticker symbol KMX. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about CarMax, and have a great day.